client got a renewal offer under 4% and he asked me, should I take it, Aleem? I said, not yet. Here's why. That offer comes with no follow-ups, no advice, no planning, and likely a higher penalty risk. It looked great on paper, but my client's planning to buy another property in the next 2 years, and that one fact changes almost everything about which mortgage is actually right for him. So I asked him something. Do you want the lowest rate or do you want the lowest total cost? Because those aren't always the same thing. That question is really what this video's all about. Before you sign any renewal or mortgage offer in general, mine or anyone else's, there are 4 questions that you need real answers to. I'm going to walk you through all 4, and I'll keep coming back to my client situation so you can see exactly how each one plays out in a real case with a real person, not just in theory. First question, what are mortgage rates actually based on? Fixed rates are driven mainly by bond market yields. Variable rates are based off the Bank of Canada setting its rate. The Bank of Canada is the bank's banks. They lend money out to all of the banks in the country. At the end of every business day, a bank has to have a zero net balance, meaning that it can't have loaned out more money than it's allowed to based on the banking rules. If they do, they have to borrow money from the Bank of Canada overnight. Sometimes this happens if someone needed a mortgage, but the bank's investments aren't maturing until the end of the week. So the bank pays the Bank of Canada's clearing rate, and they charge you the prime rate plus some premium on top or a discount below. Why does this matter for my client? Because if he doesn't understand what moves his rate, he can't gauge whether locking in now with a property purchase coming up in 2 years potentially is actually the right thing to do. You see, what your bank doesn't tell you is that the penalties for breaking your mortgage can differ largely depending on whether you have a fixed rate mortgage term or a variable rate mortgage term. I have some detailed videos on my channel that explain in further detail what those differences are. Feel free to check them out. Let's move on to the second question. How will rising rates affect you if you lock into a fixed rate? Most people assume fixed means protected and forever. It doesn't. It means protected until renewal. If rates are higher when your mortgage term's up, all else equal, your payment will increase with your new term. We call this payment shock, and it can hit hard if nobody's planning for it. For my client, this matters even more because he's not just riding out this one term, he's wanting to purchase another home in the middle of it, and we still are not quite sure where the down payment will be coming from. He also is not 100% set on keeping this existing property. So we need to have some flexibility, but he also wants to keep his rate as low as possible. But sometimes the lowest rate does not equal to the lowest payment, and this is something that he's going to have to measure to see what makes the most sense for him in his situation. If you don't have a conversation or plan about this, it could turn into a major expensive problem. Even if it's a loose plan with a few contingencies, this can make all the difference in the world. This is a perfect segue into question number 3, strategy. What strategy are you recommending and why? Anyone can quote you a rate. Not everyone can tell you why a specific term or lender actually fits your life. For my client, strategy meant structuring this mortgage so it doesn't box him in when he goes to buy again in 2 years. You see, if your goal is to buy and hold multiple properties for the purpose of investments, for example, then it absolutely matters which lenders that you go to, especially at the beginning. When you're getting started, you want lenders that have the most flexibility to allow you to qualify for more of a mortgage. This flexibility mattered more than shaving off a fraction of a percent for our client, especially in the long run. That's the whole point of this video, by the way. The lowest rate and the smartest strategy for your situation isn't always the same choice. Keep that in mind as we get to the last question, because this is one question that is arguably the most important that almost nobody ever thinks to ask. The fourth question, what commitment are you giving me to manage my mortgage over the long term? Most lenders, especially at the bank level, are done the moment that your mortgage funds. Nobody's watching for rate drops. And this is why it's important to understand the basics of how interest rates work, the way they are determined, and what the indicators are. Almost always, no matter when you got your mortgage, there are opportunities that present themselves in the middle of the term where it makes sense for you to break your current term and renegotiate. Sometimes that savings that you're getting, they're way more than the penalty costs to break. Nobody's flagging these opportunities to renegotiate. Nobody at the bank anyway. Why would they when you think about it? The more money that you save off of fees and charges like that, the less profit that your bank makes. Remember, your bank, they have two goals in mind. Number one is to minimize their risk, and number two is to maximize their profits. Don't forget this. Over the last 24 to 36 months, we've found countless opportunities for our clients who had no choice but to sign the offers that they had at the time of their renewal or when they were purchasing. Sometimes the timing of it you can't control, and you have to take what's best available for you. In these situations, we're talking about knocking $300 to $500 off per month of their monthly payments, $15,000 to $20,000 less over the remaining term that's remaining on their term. Pretty significant savings. And even if you did not get your mortgage from us, we have a tracking tool that we've put together that can track this information for you. And we notify you of this, and we show you how you can save money. All we need from you is a little bit of information to make sure that we are tracking the right details for you. If you want to learn more about that, you leave a comment here or reach out to me via email. So back to where we started. Was that sub 4% offer good? Yes, it's a good offer, but we didn't stop at that. And you should not stop at that either. What your rate is and what your payment is, it's important, but that's not the be all and end all of the conversation and the analysis. For our clients, we looked at his term, his penalty exposure, and how all of it lines up with his goals and plans. In his case, he's serious about buying again in 2 years. Taking this rate today can save him a few $100s to maybe even a few $1,000s, but it will hurt him in obtaining a larger mortgage down the road for his intended purchase. His payment for this mortgage would be higher because his terms are limited if he takes it, and it will also restrict him if he would like to increase this mortgage if he needs to take out some equity from his home for the down payment. Remember, he's not quite sure where he wants his down payment to come from. And the penalty, if he has to break this mortgage, will eat up a much larger amount of his equity, way more than he would save with that lower rate. This is the difference between looking just at the lowest rate and evaluating for the lowest total cost of your borrowing. If you're coming up for renewal or shopping for a mortgage in any situation, don't just take this first offer because the numbers look good. Ask more questions. Use these 4 questions. If you get a straight answers from them, great. And if you're not getting straight answers, well, you know that you need to do some more digging. I put all 4 of these questions into a 1-page cheat sheet so you've got them in front of you before your renewal call. I've linked it in the description. Grab it and review it before you sign anything. I'm Aleem. I hope you found some value in this. If you would like to share it with anybody that you think it might help, please feel free to do so, and I'll see you on the next one.